Learn a rare market opportunity right now with Don Kaufman. This is a Theo Trade presentation. Next thing, risk disclosure. We're not financial advisors nor a broker-dealer. For those of you, if you've not really tuned into a Theo Trade presentation before, or you have really never heard myself, again, my name is Don Kaufman. I got my start in the brokerage business, which we'll talk about here momentarily, or I should say I spent the better part of 15 years in the brokerage business, why we throw this disclosure up here. The next thing, copyright disclaimer, this is ours, this is not yours. But really, I throw this up here. If you need to get a hold of us after this evening, or me ever, just go to support@TheoTrade.com. We use a central inbox, so effectively just put Don in the title, and hit up support@TheoTrade.com. You guys can get a hold of us at any time. In fact, you can get a hold of any of our instructors and or traders, any of our support staff, support@TheoTrade.com. We're pretty comfortable answering emails. Again, we are based right here in Scottsdale, Arizona, which hey, we're looking cool compared to the rest of the nation this last week. It was only about 103. Which is cool compared to the East Coast. All right, moving forward, this is a little bit about me. So I'm co-founder here of Theo Trade. I've had quite a bit of trading experience, also a lot of Thinkorswim platform experience. For those of you that know the Thinkorswim platform, here's my background in about the 30-second version. In the late 90s, I started trading in Chicago. I got the job in Chicago because I had a lot of family that traded on the floor in the 70s, 80s, and 90s. And it was a clerk job. And it was literally 3 weeks out of college. I had nothing going for me. I was thinking about going to medical school, yada, yada, yada. 3 weeks out of college, I started clerking on the floor. After that, I was done. I spent just shy of about 2 years in the professional trading arena. A couple of individuals that I knew started a brokerage firm. That brokerage firm was Thinkorswim. I believe I was employee number 12 of Thinkorswim. Thinkorswim took off, actually became the largest options brokerage firm in the world at one point in time before we took the company public. I actually headed off education at Thinkorswim. Then eventually I became the director of education at all of TD Ameritrade and its 7 million clients. In 2015, I exited TD Ameritrade. We launched Theo Trade. People always ask, why'd you leave after all those years? Loved it. I really did. The regulations, didn't love it. So now here at Theo Trade, we took a couple of the people I worked with at TD Ameritrade, mixed them with a few other really phenomenal traders. We built Theo Trade. So I've done a couple of different TV tours. This is probably one of the most memorable. It's Mr. Wonderful versus me. This was, by the way, I was on the short side. He was on the long side of this. I don't want to ruin it for you, but Mr. Wonderful, he's a really nice guy. A little bit about Theo Trade. So we specialize in education for stocks, options, and futures. We're founded by professional traders, trading educators. Everybody here on our crew has a minimum of 15 years of trading experience. A few of us with a couple of decades under our belt. We're here to help you mitigate risks in the market while learning a skill set that can last a lifetime. Now, the other aspect I always like to bring to everybody's attention, Theo Trade is not myself, Don Kaufman. Theo Trade is Jeff Bierman. It's Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve, that's Slim Miller, Tony Rago. I mean, Jeff here, he worked with me at TD Ameritrade. He worked with me at Thinkorswim. If you've ever been on the Thinkorswim charts, a little kudos to Jeff Bierman because half the studies on the Thinkorswim charts are attributed to Jeff. Next, Matt Williamson. He's our market neutral premium selling options strategist. Then we have Corey Rosenblum. I've known Corey for, about 15 years. Met Corey years ago at a trade show, senior strategist and swing trader. Next is Brandon Chapman. Brandon also worked at both Thinkorswim and TD Ameritrade. In fact, Brandon helped write a lot of the course manuals for what was effectively the largest market education firm on the entire planet. When we were working at TD Ameritrade, Brandon specializes in macroeconomics, technicals, fundamentals. We have Steve Slim Miller, started trading in the early 1970s, options and futures trader. Last but definitely not least, Tony Rago. That's our intraday strategist. Trades NASDAQ futures throughout the course of the entire trading session with our clientele. So that's a little bit about an introduction. We have 7 full-time instructors here, all with a minimum of 15 years of experience. Onward and upward tonight. What you're going to learn this evening. First, you're going to get an introduction to Parrish Trading. You know, the presentation this evening, okay, is looking at this, you know, a really large and yet rare opportunity. First of all, Parrish Trading is always available. But right here, right now, big. Okay. What I try to do on these evening webcasts is I try to bring to you, you know, month to month, week to week, okay, what is working right here, right now. What you're going to learn this evening, it's not only working right now, okay, this is where the marketplace is headed. Right here, right now. This is the strategy that you are going to want to learn to execute. You're actually going to learn a little bit about Parrish Trading, okay? Learn to execute trades based on statistical opportunities. This ain't going to be red and green flashing arrows and guesswork. I want to make that clear right now. Everybody's, are you going to show me a MACD and a Fibonacci? It's not going to happen. It's not going to be red and green flashing arrows, okay? Some of the greatest Parrish trades just in decades, they are set up right now. Okay, you got to learn how to take advantage of them. You're going to discover and build correlation charts and trades, how you can Parrish trade with a small account. By the way, don't worry about account size tonight. I got answers for that. Retirement accounts. By the way, if you have a retirement account, an IRA, it's fine. I Parrish trade my IRA. And why correlations? First of all, correlation is a big term. I will discuss that extensively tonight. They're snapping back into alignment like never before. It's a wonderful time to actually learn about pairs. Now, let's move forward. Just kind of curiosity. And again, we keep these sessions rather interactive. How many of you joining us this evening? And by the way, right now, there are hundreds and hundreds of people joining us live. Some of you guys are going to be watching this, you know, on a recording. Feel free to answer this, you know, to your computer screen, even if you're watching it recorded. How many of you, okay, have actually heard of, okay, or actually seen a Parrish trade before? Just a Y or an N, okay? Because there's something that there's a term that we use for Parrish trading. I call Parrish trading the final frontier, right? Pretty much, yes, like Star Trek, it's the final frontier. So few people, okay, on the retail side embark upon this style of trading. Yet on the professional side, they're all over it. It's what the trading firms are based on, okay, these types of Parrish trades. So with that, I'm going to take you into this. One of the first slides I love to throw up here. Forget everything that you know about the markets anyway. You know, one of the things you have to come in here tonight, okay? I don't want any preconceived notions. I don't want to hear it right now. The market neutral strategy we're about to discuss and employ is extremely different approach to the markets. Okay, that's one of the things you kind of got to get through your head right now. And everybody comes in here, they're like, but, and they have this preconceived notion. Just sit back. Okay, for the next hour, just forego any preconceived notions, any knowledge or set, you know, notions of what you think this is, right? Really. Okay, come in here, blank slate. Now, direction, it can help you know more. And when I say direction can help you know more, first of all, traders and investors alike, characteristically, you're trained in attempt to distinguish what the market's next move is going to be. What do you think is going to happen? I mean, come on, you're bombarded with it. Financial media, trading technology, everything and every piece of crap that somebody tries to sell you about the market, it's about directional bias. You turn on CNBC, okay? Every commercial is about directional bias. Every person that comes on there, what do you think Tesla's going to do tomorrow? What do you think Apple is going to? I don't know. Oh, Google and Amazon are coming out on the same day. And Starbucks, what about your liquid crack? It's all, okay, garbage. When it comes to this, Parrish trading, it's all about relationships. Do you feel the love? Direction of the markets or individual stocks, it doesn't mean anything this evening, all right? We're all about relationships, market relationships. It's the Tinder. It's the Tinder for the market over here. If you have no idea what Tinder is, That's all right. Okay, I'm a little bit too old for that either, but if you know what it is, it's quite amusing. With that, it's about relationships. Now, let's go through some very basic skills, okay? Basic skills, redefined. 3 very basic items that you have got to understand this evening. As I said, kind of take you from a clean slate. Now, tonight's not going to be a totally basic session, right? But you do have to know these 3 variables here. You got to know what a stock is. Do you know what a stock is? Yes, okay? Most people tonight do. But listen, I don't want to take that for granted. I don't want to take it for granted, all right? You go out there, you buy a couple of shares of Apple, yada, yada, yada. So hopefully most people know, okay, how to buy a stock. How do you buy a stock? So you go out there, for instance, and buy shares of Apple. But it's also imperative that we understand how to sell a stock short. And that's really the reason for this slide. So, you go out there and you sell a stock short, okay? First of all, you could go out there and you could sell Apple. And you're like, whoa. How can you sell Apple? I don't ever remember owning Apple. You go, whoa. You didn't have to own Apple. You could sell it, okay? If you go out there and you sell, okay, Apple. You sell Apple. Let's say Apple's trading right at $200, okay? What do? Sold. So now you're effectively short, okay, 200 shares. Where'd you get the short shares? Where'd you get the 200 shares to sell? You never owned them. You went out there and you borrowed them. From who? The broker. Where does the broker get the 200 shares? The broker just takes the shares from somebody that's what? Long. Okay? They literally, when you have a margin account, very few people know this, but when you're signing the margin paperwork, when you open up an account, okay, at a TD Ameritrade, or you open an account at an E-Trade, okay, when you sign your margin agreement, you actually sign an agreement within there that allows them, okay, if you're long stock, to what's it's called hypothecating the stock. They can actually take the stock and they lend it to somebody else. You're like, but I don't want my shares lent. Well, you don't really have a choice if you have a margin account. So they lend out your shares. Now you're short. What do you hope happen at the stock? Well, okay, let's say the stock is trading at $200. So the stock's trading at $200. You hope it goes down. Why? So you could buy it back for maybe 180. Now I know there's a lot going on this particular page, but the bottom line is, yes, you can what? Sell something you never even owned, okay? And if you sell something that's trading at 200, you hope that thing goes down to $100. Why? Buy it back. So if you sell it at 200, right? You sell it here, you turn around, you buy it back here. What do you made? You made $100. Okay? Sounds easy enough, doesn't it? It's all we have to know for tonight. Buy a stock, sell a stock short. Now, you need not sell stock short this evening or in the future for the strategy, but it's essential to understand this concept this evening. Are we comfortable? Okay? Are we comfortable? We're not trading any options right now. People are like, what if I sell a covered call? What if I do this? What if I do that? Don't worry. We're not going to do any of that. Remember, okay? Come in here and be a what? Be a blank slate. You got to have a fresh start in the markets. Now that we know nothing, we know nothing right now, we're ready to learn about the wonders of Parrish trading. I'm a blank slate. Therefore, I can create anything I want. All right. This is the great way, I believe, to learn a little bit about Parrish trading. One of the first things, I call it picking a soda fight. So what's picking a soda fight? I don't know. What do you like more, Coke or Pepsi? Come on. These ain't rhetorical questions. Huh? Are you a Coke person, a Pepsi person? Does anybody even drink soda anymore? It's kind of ironic in here because this would be like Dasani water, except you pay more for the water than your Coke these days. Nobody's coming in here. Nobody's willing to say Coke or Pepsi. Oh, that's it. Okay, definitely Coke. Well, here, the bottom line, Coke versus Pepsi. I grew up in a Coke family. Pepsi people, not allowed in my house. Therefore, we buy Coke and sell Pepsi. I mean, that's how easy the idea of Parrish trading can effectively be. Coke versus Pepsi. The reason I threw the slide up here, it's an epic battle of good versus evil. Clearly, Pepsi's evil, right? How would this have played out, though, for the past 5 years, right? Okay, how does this really play out over the last 5 years? And what I'm actually suggesting in this case is, yeah, you could be buying Coke and selling Pepsi, or vice versa, right? Okay. At various times over the past 5 years, Pepsi has outperformed Coke, and vice versa. Okay. There have been dozens. By the way, this is 5 years, and I threw up intentionally 5 years and took the screenshot today to give you a little bit of a better feel for it, but there have been dozens of opportunities to trade both Coke and Pepsi from either side. In the end, Coke tastes better, but Pepsi has stayed in relative lockstep. All I want to do in this particular instance here is take you through exactly what you're seeing on your screen. Okay, one of the first things, okay, the primary symbol, which is right here. That little monkey is Coke. Up top here is Pepsi. All right. What you have here is what we term a comparison chart. Now, the comparison chart is comparing these two products over the past 5 years. Okay. And if you look right there, okay, this is opportunity. This is opportunity. Look, the opportunity, they came back together. The opportunity, they came back together. They came back together. They even crossed at certain points. Then they diverged again. This just goes on and on and on, okay? And we're going to learn how to actually take advantage of one versus the other. And I'm going to let you know right now, because Coke is, a $53 or $54 stock, and Pepsi's even more, and, it doesn't matter. You don't have to go out per se and trade the stock. So I don't want you guys immediately coming in here and you're like, I don't have that kind of capital. Okay. As I said, preconceived notions, you got to kind of push them aside a little bit. All I want you to understand is, hey, what are we going after? Well, we're going after, which terms, Parrish Trade. What we have created between Coke and Pepsi, it's turned to Parrish Trade. Coke and Pepsi are traded against one another, and the ebb and flow of highly correlated products creates trading opportunities, right? Oh, of course, this is the wrong type of pair, but they're very happy. It's pair. Anyway, how do you profit from pairs? So here's Pepsi, here's Coke, okay? In the aforementioned example, and again, we're just going through this kind of fast and loose, right? Because I just got to get you down into it. How do you profit from, or lose, okay, from the comparison of Coke versus Pepsi? Now, there's a couple of different ways. Let me actually sketch this for you for a second, okay? So what can happen over here? Number one. Let's go to number one. Pepsi could sell off with Coke staying relatively flat. So here's Coke. Let's try to say Coke goes, boo, it flattens out. Pepsi could sell off, all right? If you are, in this case, all right, if you buy Coke and sell Pepsi, right, you own this, buy this, and you sell this, as long as these two little monkeys come together, doesn't matter how they come together, right? So that's kind of number one. What else could you do? What else could you do? Well, number two, Coke could rally. If you're long Coke, right? Coke could turn around and rally up. Pepsi could stay flat. Would that make you money? Yep. How about this? Coke could rally and Pepsi could sell off. So Coke could go up and Pepsi could go down. Oh, they cross. Okay. Or number four, Coke could sell off and Pepsi could sell off faster. So, this is one of my personal favorites. Okay. In any bout of volatility, Coke turns around. It starts to sell off. Okay. Except Pepsi sells off even harder. As long as the two come together in some way, shape, or form, you're profitable. That's how you profit. Okay. From Parrish Trades. That's how you profit from Parrish Trades. Okay. Now there's ways to set up these pair trades because everybody's like worried about losses and so forth. You should be. You should always look on both sides of the trade. Okay. But what's important right now, okay, is to understand conceptually what we are trying to create. Okay. What we are trying to effectively create. And that's what I'm going to get in here is, why Coke versus Pepsi? Well, quite frankly, the reason I'm using Coke versus Pepsi right now isn't because they're necessarily good candidates right now. It's because people actually understand that. Where could you use this? You could use this in ETFs. Okay. You could say what are the S&P 500 doing versus the NASDAQ right now? You could turn around and say, what's the energy sector? Okay. Doing versus ExxonMobil. I mean, I can go on for a half an hour. In fact, okay, I even pulled up a live trading application, which we're going to do here momentarily, to actually show you a few live examples. But before we get there, okay, you got to define this. You got to get down dirty about it. Parrish Trades are market neutral, meaning overall direction of the marketplace doesn't really significantly impact the overall profitability and or loss of a given trade. Pairs, though, it's not about being right or wrong directionally. It's about the relationship. It's about the correlation, like playing out. The basics of Parrish Trade. The goal is to match two trading vehicles that are highly correlated. Now, you can't let that word correlated kind of scare you, okay? Look, we're just looking for stocks. We're looking for an ETF. What's an ETF? Like, people always get, like, intimidated by this. Do you want to know what an ETF is? Here you go, okay? Pull up an ETF. The SPY is an ETF. The IWM is an ETF. The QQQ is an ETF. The XLE is an ETF. The XLF is an ETF. The XLP is an ETF. Like, those are ETFs, right? Okay. The only question is, which one of these ETFs in here, 6 ETFs, do they have a heavily relationship to one another? I mean, that's relationship and correlation. Forget the word correlated, okay? I'm in a relationship. That means you're correlated with the individual. An example of this, be two stocks in the same sector or just with similar business interests, right? Okay, I mean, I'm going to show you another one here momentarily. So, all right, let's get down to it. Okay, logic of pairs trading. Pairs logic is to seek out correlated stocks, indices, or products. Okay, currently displaying a divergence. Ruh-roh, raggy, divergence, big word. Okay, you buy one product and sell another short. You're seeking the deeply correlated pair to normalize. It's called mean reversion, whereby coming back into alignment. Relationships and correlations in countless underlyings have been tracked and traded for decades. Now, let's get kind of down in again about this. So here, I'm going to bring up the cues. You guys with me? We're going to do a live example really quick. So I like to do this because it's a little bit off the cuff. Everybody has these prepared presentations. Not me, not ever. All I'm going to do here, I'm going to bring up a correlation chart, okay? And a comparison chart and some correlation. First of all, this is 3 different products, and I'm going to label them really quick. You ready? Okay. Up on top right there. That's the Qs. Okay. Right in here, this is the SPY. Down below, that's the IWM. Okay. Could you look at this and say, like, wow, look, they were together over here, but they split apart over here. That's what divergence is. They split apart. That's what divergence is. Okay. Look. They split apart back here. They diverged back here, but then they converged over there. And they split apart here, and then they converged here. The key to this strategy, okay, isn't just to visually looking like, okay, they split apart. We can actually figure out statistically, unequivocally, when you should enter and when you should exit these trades. That's the key. And how to actually construct the trade. That's what we're going to get to over here, right? So, people are asking some tough questions already. Promise. We're gonna come to them over here. Right? Listen. Keep it simple. Keep it simple. Your Parrish trade doesn't have to be people are like, what if I did this in the VIX versus this versus this? Why got to be so complicated? Right? What are you, an engineer? Okay, trying to complicate simple things right off the bat. You need not complicate this. Why not just look at the index products? It's a good start. Okay. The question is, have they actually split apart enough? Well, I'm going to get to that a little bit later. Those relationships, though, okay? I mean, do you think that the NASDAQ versus the S&P, okay, versus the Russell is something that's been tracked for decades? Of course it has. Of course it has. And it normalizes just like I showed. Now, some of the advantages of Parrish trading. Okay, the Parrish trade helps control market risk. If the market or sector crashes, the short position negates the loss to the long position. Imagine what I just showed you a second ago. So let's say the market completely and utterly crashes. I mean burns. Okay, here's the NASDAQ. The NASDAQ goes, all the way down. Okay, and this product, all the way down. As long as the NASDAQ, if you were short this little monkey up here. Again, that says short. You were short the NASDAQ, for instance, and long the IWM. Okay. Oh, I'm sorry. That's actually going to be a profitable position. The market crashing actually helped you in that particular circumstance. Okay. Again, direction, bias can't help you. All right. Trading strategies independent of market movements are said to be market neutral. We often phrase Parrish strategy the final frontier because the opportunities, they're seldom sought after by individual clients. By the way, this is one of the most advantageous areas that's like undiscovered to most when I call, individual clients and retail traders. That's you at home. Okay. These are wildly advantageous trades because they're, again, seldom sought after. If you're looking for what is like the final frontier in this business, you're looking at it right now. It's Parrish Trading. Okay. I mean, your commonly known strategies, I'll tell you what, there's Parrish Trading, people are often familiar with it, but they don't do it. And the question I have for you is, why don't you do it? No, why would you rather take heavy directional risk? This is what people would rather do. They'd rather go out there. I had to bring this up. Halliburton. I brought this one up because Halliburton has declined almost 15% on a year-to-date basis. Would a Parrish trade leave you this exposed? Look, it's down almost 15%, and this is a year-to-date chart. Okay, here, let's have some fun with that. Would a Parrish trade leave you this exposed? Well, Halliburton versus Schlumberger. Okay, rather than endure the outright risks of owning Halliburton, okay, you could look to create a Parrish trade and offset a significant portion of your directional risk, right? Like you could do something, and by the way, I'm throwing like different pairs in here, like Walmart, Target, Halliburton, Schlumberger. In fact, I could bring up the Walmart, Target one too, because I've done a bunch of different examples today. But here, the Halliburton versus Schlumberger. Okay, both of these products are down and down big. Now, this is a really fun version of this. I actually opened up in this case a 3-year chart. Okay, the smallest divergence can create an opportunity for a Parrish trade. But here's the bottom line, and the reason that I threw this up here: the Halliburton, okay, and Schlumberger, they're down collectively about 45% over the last 3 years. But had you actually embarked upon a Parrish trade between them, okay, not only, like if you actually had one long and one short, that ebb and flow, like this, okay, these divergences along the way, this is degrees of profitability. And that's what has to be recognized in this, okay? That's really what has to be recognized. And it's just not, and that's the part that, again, most people, they're not willing to take the time. A moment ago, I was talking about, Walmart. All right. In fact, I'm just going to blank out the slate and throw Walmart in here. Okay. You look at something like Walmart. Okay. What can you compare it to? I don't know. I just throw it up here really quick. Compare with, custom symbol, type in Target. Okay. Would this and could this be effective? Maybe not right now. Okay. But what if we had a way, okay, to tell you if this is going to be effective? What if you could actually go in here and we had an indicator? All right. In fact, this time that's it. I'm going for it all right now. Here's Walmart versus Target. In fact, I'm going to delete this out really quick. Remove that one. All right. This is Walmart versus Target, literally on one chart. I'm actually going to bring up a style over here. I'm going to load up a style. Okay. You guys you're going to love this. And on this particular style, okay, it is going to tell me everything I need to know about this pair, okay? And it's even going to tell me, okay, at the time I should execute the trade. This is actually a pairs standard deviation indicator along with a correlation. So we'll come back to this a little bit later, but this chart right here, okay, can actually tell you, and by the way, it's not about like a chart with red and green flashing arrows. This, okay, all it is standard deviation, and it says this is when you should get into this, okay? How about this? When this little line touches this line right here, get in. Had you done it right there, the trade is wildly profitable. Look, right here, get in. It's that easy. If it hits the bottom line, get in. Does it say to hit the bottom line right now? Not even close. So this is not, okay, by any stretch of the imagination, a viable trade right now. But what I'm trying to display to you and to make it a little bit easier for people to interpret, okay, is when you start looking. When you start looking at like one versus the other, you're like, well, they kind of look like they're split apart a little bit. Yeah, that's why we have an indicator that says get in here, get out there. Okay? Think about that for a second. Because again, got to make the entry and exit of this stuff easier. Now, finding pairs candidates. There could be competing companies, possibly in similar sectors. Correlation scanning and analysis, ETF, index. Okay? Listen, the ebb and flow of Parrish trades. Divergence, when the price of an asset or indicator, okay, move in opposite directions. Convergence is when they actually move together, right? Convergence, divergence, convergence, divergence. Again, here's Walmart versus Target. Opportunities in Walmart versus Target, and this is actually a screenshot that I took. These, they're endless. Look at how big that divergence is. Look at this divergence in here. It's huge. And then they come crashing back together, okay? Big time profitability. Now, okay, I can actually show you, this is back in that October-November time frame. If I pull up, okay, if I actually pull up, this is the Thinkorswim trading application, and I actually back up and go 1 year, you're actually going to see that, yes, they were very close to being, okay, quite viable candidates for a Parrish trade at that point in time. That's what this indicator does for you. The indicator actually tells you, all right, when they are broken apart, when should you actually enter into those particular, okay, instances. All right, moving forward over here. Structure of the Parrish trade. The Parrish trade is structured via being long, okay, one product and short the other. That's it. In our Walmart versus Target pairing example, you know, you could say like in this case, you know, we could be short Target and go long Walmart. I mean, look, shorting Target, long Walmart, which is owning shares, right? The hard part of this, and I think that most of you probably get, you're like, okay, so how do I do this? Well, if you had a bunch of capital that you just wanted to blow, you could go out and literally, okay, sell Target short. But selling Target short, that's not cheap. I mean, listen, Target's an $87 stock. You got to go out and short that. And then Walmart, you have to turn around and buy it. Okay, you're buying a $112 stock. Oh, all right. Think about how much capital you're tying up. I mean, net, what are you really tying up? You're tying up $200. Okay, you're tying up $200. That is a ton of margin. I don't think it's fair to do that. Okay, but the structure of the Parrish trade continued. Don't get too excited just yet. It's not just as easy as short one and buy another and vice versa. Okay, Target's an $87 product. Walmart's a $112 product. Parrish trading, it's not just about, by the way, Parrish trading, it's not just about finding two products. And that's this, most people do this. The products split apart like that, right? Oh no, they split apart. It's not just identifying the products splitting apart. It's learning how to convert Target into Walmart. Like, how many shares of Target do I need for Walmart? Okay, how do you figure that out? That's actually what we can get into deeply, and think about this for just a second. And go back over here to a trading application. You're like, why do I have to think about this? Well, if you look at like Walmart, in the next 24 days, Walmart has about a 24% volatility. Target, okay, Target has about a 20% volatility. You're like, wait, what are you saying? I'm saying, okay, that you can't just blend one product versus another. They're different. Okay, they're different. And by different, I mean, what do I really want to get into and what do I really want to say? Here, okay, if you have a $50 stock, you have a $50 stock, okay, and then you have a $100 stock B. This is stock A and this is stock B, okay. Can you convert these two stocks, okay, into a Parrish trade? Can you do it? Can you convert a $50 stock into a $100 stock? Stock A versus stock B. Can you convert those two? Anybody? Okay. Dead silence in the chat room right now. Let me further complicate the issue over here. All right. I'm going to further complicate this. Okay. What happens if this $50 stock has 30% volatility, and the $100 stock has 15% volatility. Okay? Now they become almost the same. They're equivalent because this stock can move twice as fast as this stock, which means it's twice the value. That's what blows people away about, like, you can't just say A equals B, because they don't. Okay? To make A equal B, you have to check on things like volatility. You got to check on share price. There's a lot of factors in play because you have to do this, okay, accurately. Once you actually understand that, then you can go and you can take and structure Parrish trades with options or even futures. Okay? Maybe you don't have the capital to buy one stock and sell another stock, especially if you're in an IRA, because you can't even do this in an IRA, right? If you're trading in an IRA or tax-deferred account, you cannot create short stock positions. Have no fear. Pair strategies can be equally as powerful using defined risk options and even vertical spreads. Okay? It's not fancy. Okay? It's not. You can substitute the underlying stock or ETF with option spreads in a matter of minutes. This is also brand new. Check this out down below. You can even use micro futures. There's a new futures contract called micros to create Parrish trades. They're pennies on the dollar at risk. Literally pennies at the dollar on risk. And if you've never seen the micros before, come into the futures contracts. By the way, there's tons of different futures contracts, right? Well, now they have these micros. Okay, what's a micro? Well, I'll tell you what, overnight margin in a micro is $693. That's an S&P E-mini micro. Okay, there's micro gold contracts. The micros are huge. They're the amount that these things are trading, it's the most successful product ever released in the history of the Chicago Mercantile Exchange. The micro is. Okay, it's the most successful product ever released. The volume in there is monumental compared to what they expected. Like 200,000 contracts a day are trading of this micro. Ties up minimal margin. What it basically tells you, you can even trade those things inside of an IRA as long as you're at the right brokerage firm. So there's no excuse, like somebody that's like, I only have $2,000 in my account. I don't care. $2,000's more than enough now. They got micros. Now. It just doesn't matter. Capital isn't the key in this. It's understanding how to put these things together. It's understanding how to find happy pairs, right? Again, it's a different kind of pair. You got to learn comparison charts. You got to learn pairs correlation. You got to learn, okay, statistical data. You can scan for opportunities. Okay, you got to learn to align the shares of your pairs trade. And I can show you all of that. But again, what if you had an indicator to help you identify, all right, the best pairs candidates? This is a pairs correlation and standard deviation indicator. This is exactly what I was talking about a moment ago. In fact, I took a screenshot of this today and I decided to pull it up. But this displays, okay, how correlated the pair might be over time. It also displays when the best time to enter into the pairs trade, okay, on a standard deviation. Now, I don't mind showing you, okay? I don't mind showing you this stuff at all. But, how about just one more pairs related strategy? So, option geeks, get ready. Okay, option geeks, get ready, because I'm actually going to show you something quite entertaining here in a second. First, okay, I'm going to come in here and I'm going to create a, once again, kind of a quick pair. Quick and dirty, I'm going to create a pairs candidate. We're going to put in the QQQ. We're going to come down to style. Okay, one of the first things that I was showing you a little while ago, this is the QQQs versus the spiders versus the IWM. And you can see there's this big gaping kind of divergence over here. First of all, I'm going to pull the spiders out of this. Ready? Remove the spiders completely. Done. So now you've got this big divergence over here. Okay? This is between the NASDAQ and the IWM, which is the QQQ and the IWM. There's this big divergence. Okay? But you don't necessarily know, is this good? I want to know. Okay? Is this good? Is this good to trade? There is no way that you can answer that. There's no way you can answer it without having some type, okay, of kind of like interference, if you will. You have to have, all right, statistical data to go off of. You have to have statistical data to go off of. So I'm actually going to remove that one. So now we're doing QQQ minus IWM. We're going to come under style, okay, and I have a pre-formatted. It's pairs correlation and standard deviation. Just want to show you something, Okay, look at that. All right, and you know what it says right now? It says, you're gold, Jerry, gold. This is a strategy that you can go after. The question is, how do you go after it? That's, you know what? I can show you 50 different pairs candidates that are in a hit right now. This one's huge, by the way. This is one of the biggest standard deviation breaks, okay, in decades. In fact, you can go back 5 years. You can go back 5 years. Look at this. 5 years, you don't see anything like this right now, okay? You can go back 10 years. I told you that I began with tonight. This is the biggest, okay, break in divergence, okay, between the Qs and the IWM. It's all about, though, how to go after it. Option geeks, check this out for a second. This is a Parrish trade. Parrish trade, this is a high probability split iron condor. Okay. Now this one, the one I've created down below, this one is actually the Russell versus the SPX. It's a split iron condor. Okay. The logic of the split iron condor is identical to an iron condor, yet a spread in two separate products. Ideally, split pairs irons are designed for deployment, okay, within index and index-related products or ETFs. The trade design, selling out of the money call spread in the strong product, selling out of the money put spread in the correlated but weaker product. Okay, this is literally, okay, an iron spread through two different products. Here's what the risk graph would effectively look like. Again, what we have right now is what? We are selling the put spread. We're selling the put spread in the Russell, and we're selling the call spread in the SPX. Why? Because the SPX right now is a lot stronger than the Russell. If you wanted to see a chart on that, okay, I can actually take you into this. We can, instead of looking at QQQ versus IWM, we could even look at SPY versus IWM. Okay, we could look at the spider versus the IWM. We could take it down to a tighter time frame. Looky, it's touching. It's touching, okay, a 2 deviation. This is the stuff that you have to learn. This is a split iron condor. Now, fear not any of this stuff. The Parrish trading, okay? Listen, you may not know anything about Parrish trading. Maybe you have limited time, limited experience with any trades, okay? We can show you how to do this. We can show you when to do this. We can show you how to execute this. I mean, I'm comfortable going through example after example after example tonight because I know this, you have to understand. We create here at Theo Trade detailed recipes for every single strategy. But the Parrish trade, we also use an indicator for execution. You know, you look at this and you wouldn't bake a cake without a recipe. You know, people trade with one all the time, you know, without a plan. Okay, we give you a definitive recipe. We give you, all right, detailed recipes and how and when to execute this particular trade. Right? This is what you need to know to successfully create Parrish trades with minimal risk. It's a pair. Okay, you need to know, how can I find pairs candidates? Well, you can scan for them. There's no question about that. You can scan for them. But we have means to go about finding pairs candidates. Okay? When will I know if the pair meets the guidelines? And when should I, okay, do or not do the trade? As you saw moments ago, I did a trade based on some, like, you know, it hit the blue line. Well, explain what the blue line happens to be. How do I set up the trades? How many shares or how many option contracts or how many futures contracts do I trade, okay, in each security? Like, you know, if you go out there and you're going to trade, like I showed a moment ago. In fact, we're going to back up for a second. Do I do one contract in the Russell versus one contract in the SPX? Is that okay? Is that equivalent? Because the Russell's more volatile than the SPX. Is that fair to do that? Okay, this is, again, critical to understand this stuff. You can't make those mistakes, right? You need to know when to enter this. You need to know how many contracts, how many shares, okay? And after entering into a Parrish trade, what's the exit criteria? When do I get out? How much should I make over here? Will Parrish trading work in heavy volatility? Okay? Will the strategy help me years from now? One of the things you have to recognize, actually, pairs is the most effective in larger bouts of volatility because there is a stronger, okay, there's a much stronger, what we term correlation coefficient, the higher the volatility goes. What I'm saying is this, okay, if something like the VIX goes up, okay, Parrish Trading is going to go off better than it currently is. And it's really good right now. Okay. In a higher VIX, it's going to be even better because products are going to correlate even heavier. Okay. Can you do this in an IRA or retirement account? By the way, absolutely unequivocally, yes, you can do this in an IRA or retirement account. In fact, that's what I do. Most of my trading now is done in my retirement account. I've hit the age where I'm working on the retirement account. How do I size my trades for my account size? Okay. How can I set and forget these trades? Like, is this something that needs to be monitored? By the way, you could take Parrish Trading and trade it intraday. You could say, like, I want to get in, I want to get out, I want to get all over this. But you can also put these trades on, set them 3 months, 6 months, a year, and walk away. Okay. The trades don't necessarily have to be monitored constantly, consistently, or any way, shape, or form. Right? These are like trades. You can literally watch the pair. In fact, when I say watch the pair, check this out. Once you know a little bit about Parrish Trading, you know what I'm doing here? This is a symbol on my watch list that is Target, okay, minus Walmart, and I'm watching the pair itself. I'm not in here going like, is Target going up? Is it I'm actually watching, okay, the two products as if they were one. And the reason I'm doing that is because I can set an alert on that one product. Then when it hits a particular level, like minus 25, good, I'll get out. It can teach you all of that stuff. I mean, that's what Parrish Trading is about. And what we do here at Theo Trade, we do criteria. What's criteria? It's a recipe, all right? Because what you have to be able to do to make this work, it's about answering the what ifs. It's what makes good setups and candidates for Parrish Trade. How do I buy one stock and sell another? Like, how do you do this with options? How much capital do you commit? If I Parrish Trade with options, what strike price options do I buy? When do I sell? How many? What expiration cycle? Then everybody always looks at this and they go, it's Parrish Trading. Why doesn't everybody do this? This is one thing I got to tell you, when it comes to Parrish Trading, I've been thinking about this for years. How come everybody doesn't do this? All right. Most people, they don't want to take the time to even learn anything. They would rather look at red and green flashing arrows on a chart and go, but the Bollinger Band tells me what it's going to do. Okay. No, this is what you really need to know. Stocks, ETFs, can I trade this on? How do I determine, okay, what to pair together? Position sizing is huge. Aligning the two underlyings into one Parrish trade. That's what I was just doing a moment ago with Target and Walmart. What's the correct correlation for the trade, right? Meaning that the correlation has to be there. That's actually a number. We're going to say, like, if you're not, for instance, 80% correlated, forget it. Can I do this with options? And which options do I use? How do I execute the trade? When do I exit? What do I do with the losing position? What delta do I use, to sell the options in a high probability split iron condor? We answer all of that. Okay. That's what we do. Theo Trade's got the answers. We're just going to build a recipe. It's got definitive criteria. It's got checklists for each strategy and all the different unique variables you're going to encounter. If a stock goes up, if a stock goes down, like somebody was saying, like, oh, Walmart's about to hit earnings. You're exactly right. I wouldn't touch that thing. Not gonna touch it because of the earnings. But it's part of the beginning. I mean, this is how, it's when, it's why, it's at what price. It's just the beginning, though, of the variables you're going to face. What about dividends? Okay. If dividends come out, that can actually impact you if you're short the stock. Again, what about earnings? What about stock splits? Okay. How do you limit all those risks? The secret's in the sauce. Now, you can read about Parrish Trading anywhere. But you better think again, because what this is, it's not about the strategy. I'm telling you, there are thousands of books you read about Parrish strategies. None of them, though, are actually going to tell you how many shares of X do I buy versus Y. How do I actually take this trade and convert it for options? How do I take this trade and convert it into futures? I mean, that's the whole thing. People would rather spend $23 reading a book that will tell you absolutely nothing about some monkey that traded pairs 15 years ago. Bottom line is, we spent years fine-tuning this trade setup and criteria. Okay? When you hit that portion of the criteria, follow steps to build a trade. Okay? Now, here's how you can actually trade pair spreads with a formula. Before I get there, a little bit of what our clientele here at Theo Trade are saying. Don's the most knowledgeable person I've ever heard in my 50 years of stock investing, and I've listened to many. His knowledge of how the markets work is like sitting next to a finance PhD. Highly recommend learning, okay, what this man has to say. So I just wanted to throw, one of the client sayings up there. We build a course, okay, And each one of those courses has highly detailed criteria. For this Parrish Trading, it's called Parrish Trading, the final frontier. This is the class curriculum. Class curriculum takes you through the best setups for Parrish Trading. Talks about why correlations are snapping back alignment like never before. How to Parrish trade stocks, ETFs, options, $2,000 into your account. That's all you have to have now because they have micros. How to trade pairs, okay? Again, and really build your own Parrish Trading systematic setups to enter, to exit, to execute. Step-by-step criteria to construct unique Parrish trades. So we're actually going to walk you through, and we're actually got formulaic accuracy for creating your trades, how Parrish Trading puts statistical odds in your favor, discover why trading market relationships and not direction. It's been a go-to strategy for countless hedge funds, trading firms, decades. There's actually a firm based out of Philly originally, Susquehanna. Okay, Susquehanna, they made their mark. It's Parrish Trading. Okay, they now call it statistical arbitrage, Peak 6, Citadel. If you've heard of these trading firms, okay, this is what they're based on. How Parrish Trades negates market risk. Right? That's what trading firms want. They want to negate market risk, reduce exposure. Okay, even in the most extreme volatility, how Parrish Trading can be one of the safer ways to generate consistent returns. Okay, how you can build a market neutral trading strategy, can profit in any kind of a marketplace. Again, and when is the best time to open and close these particular Parrish trades while finding candidates. The class is called Parrish Trading, the final frontier. I am the trade instructor. This is actually a 4-hour course. The bulk of the class is 3 hours. There's also an hour Q&A with it. It's a 4-hour course. It is available immediately. Okay, it's in the can. It's ready because of the additional indicator in the class. We actually recorded the class prior to. The class slide deck that includes the entry and exit criteria. The checklist is available immediately right now for download. The course is archived. It has 24/7 access, or you can even download it, onto Theo Trade mobile, right, for iOS or Android. So we have our own applications. The cost of the class is $199, and the class also qualifies you for reduced commissions rate. Now, we have a little bit of a special for this evening because we feel that every time, and if you guys have been to a presentation before, or anybody's presentation, I always kind of feel when people come out this evening, you've been there and you've done that. Many of you guys tuning in tonight, you've already been through the gauntlet of paid classes. You've been through indicators and secret squirrel black boxes and more, and they just lead you on, only to find just buy this one last thing to make all the difference, but wait, there's more. Theo Trade is vastly different. We've had enough of the educational garbage, the educational sales pitches, and we're going to put an end to it. So how many of you guys have actually been through some different courses and so forth before? Maybe not on Parrish Trading, but anywhere. I mean, I think that's a fair thing to ask, because what we do here at Theo Trade, I think is going to be vastly different. I mean, one of the things we set out to build at Theo Trade, first of all, is to disrupt financial education. We're built by professional traders. Everybody on the crew's got 15 years of experience. By the way, no one here at Theo Trade had any professional sales experience. Listen, I worked as a trader, a risk manager. Then I worked running an education division for the largest options brokerage firm. And then I basically ran the education for the largest brokerage firm on the planet at the time. All of our other instructors here, they were traders. The funny thing is, Matt Williamson, I'll tell you a quick story. Matt Williamson, one of our instructors, now I found him. I used to look at his account at TD Ameritrade. How do you like that one? I used to look at his account. The guy traded huge. And I'm like, this guy would be a great instructor. That's how we found him. Tony Rago is another one. These were clients of TD Ameritrade that were just getting it done. And I had heard about them, and that's how we found them. That's the truth, right? Educating you was our only goal. And we introduced to you what we call TotalTheo. It's unlimited streaming monthly membership. The way to explain Theo Trade, imagine entering into an education site for the stock market, for options market, for futures, for anything market related that was like Netflix. Any genre of trading that you can think of is covered here. Any genre of trading. You want to know Parrish Trading? We got you covered. You need indicators? We got you covered. How about proprietary indicators? We got you covered. We trade live 6 hours a day. We got you covered. We have 83 classes. We got you covered. Everything you're ever going to need to trade. People go, I need some support. We got you covered. You have one-to-one email support. Go for it. It's all there. Here's what our members are saying. By the way, you guys are rocking it. Very impressed. It's refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach. Okay? And I'm sure I'm not the only one. Effectively, we don't charge you more. We don't charge you more for more stuff. We just keep adding more stuff to Theo Trade. By the way, I love this. This is one of my favorite my favorite kind of pieces of feedback here from King Cole number 7 from Theo Trade chat room. It's so amazing what we learn when we listen. Thanks to my ex-wife for this quote. Don's a wonderful teacher. I've really enjoyed in listening and learning from him in the last few months. I love how Don goes about explaining and showing and how to go through all the mechanics. Anyway, what we do here at Theo Trade, number 1, we give you access. This is the first thing. We give you access to over 83 trading classes. Okay, done. 83 trading classes. For the most part, everything we have done since day 1 here at Theo Trade is available to you right now. Okay, is it also the Parrish Trading? Yes. Okay, you get the Parrish Trading class. That's what we're talking about tonight. By the way, you also get the Infinity Spreads course, the High Probability Trading Within Out Spreads, Guide to Selling High Probability Iron Condor class, the Selling Premium Minimize Your Risk, Survive and Thrive in Extreme Volatility, Day Trading NASDAQ Futures, Covered Calls. You want to know about covered calls? We got a class on that. Essential skills for consistency in trading. Top 10 skills for growing a small account. Okay. Apparently I put the Parrish Trading on there twice. It was that good. Oh, it's $1 more over here and many more. I mean, listen, there's 83 classes in there. If you want technical analysis, okay, everything else in this entire industry pales in comparison, okay, to what we offer in here. It's access to over $5,000. That's just classes. Okay. Do we do more than classes? Oh yeah. Okay, we ain't even done, not by a long shot. You have access to 59 proprietary indicators and scans. The pairs correlation and standard deviation. Here it was. I talked about it with Walmart versus Target. It's part of this. We also give you auto expected move. We give you gravity points, Theo Trade RSI Laguerre. We give you Quantix, NQ levels, next generation squeeze indicator, complex position tracker, IV rank versus percentile. People, that's just the tip of the iceberg. Okay, there are firms that are going to charge you $1,000 per indicator, or you have to be on their platform, or do this, or a little dance. Okay, they're always upselling crap. We don't have to do that. We have almost 4,000 members here at Theo Trade. Okay, that's Parrish correlation standard deviation indicator. That's what it looks like. Next, we have coaching. Okay? We have live trades and email trade ideas. Okay, we have a live trading chat room. We broadcast 6 hours per day live. I get it. You can't necessarily tune in. Some people look at this and they go, you got 83 classes, 59 indicators, and 6 hours a day. How can anybody watch this? I don't know. When you tune into Netflix, how can anybody watch everything that's on there? You can't. You find a genre and you dig it and you go for it. And you sit there and you binge watch. That's what we are built for. You can watch as many hours as you want. Okay. By the way, one really cool thing here on the back end of Theo Trade, we had somebody in 1 month, okay, that watched and literally watched over 300 hours of programming in a month. That's just sick. It's awesome too. We give you real-time trade ideas every single day. Market insights analysis. I did a snap trade today. Snapchat. Gold. Okay. I hit the butterfly in Snapchat today. We email out trade ideas and we'll surely highlight and trade pairs spreads. Okay. We have 4 distinct trading portfolios. We have daily coaching sessions. We have a daily coaching session. The king of coaching is Jeff Bierman. Jeff Bierman is also a professor, okay, of finance at Loyola. Okay, and moonlights at DePaul, but he also moonlights here at Theo Trade. And our instructors directly answer your trading questions via email. Okay, coaching alone is a couple of grand every single month. We give it to you. It's part of it. Okay, Theo Unlimited. It's only $99 a month. Okay, that's it. Parrish Trading, over 83 classes, new monthly classes. Didn't even mention that. There's 83 classes in the can right now, meaning that there's 83 classes that are there. Okay, we have another class coming up soon. We have daily live trading and chat room. Everything's archived 24/7 because I know you can't watch it all day, every day. People work for a living. We email trade ideas. Okay, we even have push notifications now on our iOS and Android devices. Okay, trading indicators and scans, coaching sessions, email support, Theo Trade mobile. Find all of this. Okay, go to this site right now, theotrade.com/all. Again, it's theotrade.com/all. You know, one of the things somebody will inevitably ask, and I'm going to get to it right now, is to say, can I just buy the Parrish Trading class? You can. It's $199. We will sell you the Parrish Trading class, and we will literally sell you the class for $199. It's a la carte. Or you get everything for $99 a month. Why do we do that? Because we'd rather give you the $100. Take the money. We'd rather give you the $100 because we want you to be part of Theo Trade. Okay, not just for a month or for 2 months or 3 months. Listen, this is month to month. We're not locking you into anything. There's no contract. This is not $99 one month and $200 the next month. It's $99 a month. You want to cancel next month? I get it. I'll love you. Okay, I'll still love you even if you leave, but it's $99 a month. You know, the ironic thing is somebody will actually sign up for $99 a month. Okay, after 3 months, they're like, oh, okay, they'll be back. Everybody comes back here. You want to know why they come back? Because there's nothing out there comparable on any level at any price. It's $99 a month, and that's why we can do that. All right, what our members are saying over here. Don and John, thanks for taking the time to answer my questions. With the lowered commission rate of blank per contract, it takes just 8 round trips, okay, 1 contract option trades to save $99. Okay, the point that I'm making with this email, first of all, I had to actually blank out what it costs per contract. We have a negotiated commissions rate with E-Trade and TD Ameritrade. Even if you already have an account, you don't have to open up a new account. Listen carefully. Okay? The negotiated rate is good enough to probably save you $99 a month. All right? This is before you talk about all the services that you're offering here for the membership. You've got me. I'm in. Okay? How do I make this happen? It's from Vince. That was actually a really recent email. Well, Vince, okay? It's theotrade.com/all. I'm going to show you guys a little bit about Theo Trade. Then I'm going to answer some questions. Okay? But let's get down to it. I'm going to open up here, actually show you what Theo Trade effectively looks like. First thing, this is Theo Trade. We're here. Okay? This is the member home. We have a very extensive archive. All right? It's under archives. We break down the archive by individuals. Hey, it's Jeff. Okay? We break down the archives by individuals. There's Jeff Bierman and Steve Miller and this classes archive. But the archive is so extensive that you can also search it. We also have probably what we call our featured classes, like our favorite classes, the next big short, okay, like infinity spreads, how to collect income being short, high probability in-out spreads. These are like the monstrosity of classes. These are the most frequently watched classes here at Theo Trade. Those are found right here. But we also have, okay, like almost like a Google of our site. You can Google anything on here, right? You can go in here and go, I want to know everything, okay, about bonds. I don't know why I picked that. I want to know everything there is to know about bonds, okay? And just simply hit search, okay? Bonds are driving the purchase of everything. That's a pretty good one. Stock, bonds, and gold rally, all right? How we're trading gold and bonds right now, okay? Financials feeling the wrath of bonds. Everything about bonds is covered, so it's searchable. Next thing, you might be brand new. You've had absolutely unequivocally no experience in this business. That's why we have a little menu right here on our site. You know what it's called? It's called Start Here. You know what Start Here does? It says Start Here. Options 101, okay? Options 201, Options 301, Order Execution. Order Execution doesn't sound like much. That's the difference between you being profitable or not, okay? What products to watch and why, okay? These are just some of the Start Here courses, and you're like, what are these, 5-minute videos? No, okay? Options 101, if you want to learn about options, that's up to you. This first part is 45 minutes. This is how it works. Okay, you just come in here. I'm playing a class right now. That's it. We're playing a class, and I can fast forward. I can kind of zoom in, zoom out. Okay, I can actually download all the slides. This is what Theo Trade is. That's what the Start Here. Next, this is the classes. This is all the classes that we offer. Okay, when I said there's 83 classes, they're broken down. They're broken down into different genres, just like Netflix does. You're like, I want to see a horror movie. Oh, you want to see a horror movie? That's day trading classes. Okay, you're like, I want to see something funny. Oh, you should go to technical analysis classes. I'm just kidding, poking some fun at day trading and technical analysis. But if you want to know about option strategies, stocks classes, futures classes, here, look, we have an entire genre for Parrish trading. Guess what? This is the class you're looking for. This is the class. There's Parrish Trading 101, and then there's the Parrish Trading class, okay, that we're talking about today. Those are in there, right? Anytime you want, just back up, okay? Maybe you want to know about like mindset, okay? We have a mindset class. No joke. When this class first came out, the 5 essential building blocks to successful trading, that class, that one's done by Steve Miller, okay? We charged $1,000 just for that class, okay? Deadly serious. He charged, okay, over that. It's a $1,000 class. This one, incredible. I mean, the guy's got, 40 years of experience in trading. Okay, it's, again, amazing what he has done in there. All right, onward and upward. Next, I'm going to show you over here. This is what the chat room looks like. This is where we broadcast live, okay? And this is where our clients can talk to one another. By the way, totally open chat room. We don't care. Whatever goes on. It's free for all in there. All I ask in our chat room, please keep it PG-13, okay? We're PG-13 kind of a firm, all right? PG-13, whatever it means to you. Last but not least, all the different resources, okay? We give you account opening deals, the TD Ameritrade, Tastyworks, E-Trade. Listen, okay, we work with all the major brokerage firms. Here we are. Again, this is TheoTrade.com/all. Now I'm going to answer a couple of questions over here, and I'm going to pop this web address in here for you. Again, it's $99. Today, it's $99. TheoTrade.com/ALL. All right, let me answer those questions, and we'll kind of move forward from there. Bear with me here momentarily. All right, one of the first things that always is asked, and I'm just going off the cuff over here. This is a subscription, okay, for $99. You can cancel any time, okay? You can cancel any time, but it is a month to month. Can you get out of Theo Trade? Can I stop? Yes. Okay, give us a call, send us an email. We're here, right? So don't worry about that. Next question. Almost everything that is done here at Theo Trade is IRA or retirement account compatible. So if you have a retirement account, have no fear. We are extremely retirement account oriented. Okay. If you can't make classes live, are these classes recorded? Absolutely. Not only do we record things, okay, but we almost instantaneously post them. All right. Somebody said, is there a forum or a bulletin board? Well, we prefer that today, okay, at the speed of the marketplace, we prefer that we actually go in real time in our chat room rather than like a bulletin board that's much more stagnant. Okay. But in our blog of our nightly videos, yes, absolutely, you can leave commentary and we can answer those comments in there. So yes, we kind of have both. I prefer the chat room or email us. Okay. The class, the pairs class, is already recorded. That pairs class is ready to go right now. So you literally enroll this evening and you can start watching it this evening. All right. Oh, somebody was like, I'm having a little bit trouble getting my head wrapped around some of the concepts of Parrish trades. Have no fear. As I said a moment ago, not only do we have the start here, but we also have pairs 101. We knew that that was going to be an issue with the pairs class because there's not too many people have pairs experience. So we actually have this pairs 101 that we put together for it. All right. Next, how do I get started over here? How do you get started? Well, first go to theotrade.com/all. By the way, it says, how do you get started? Can I access Don in the future? Yeah, you can access me in the future. By the way, I want to make it very clear once again, you need to get a hold of me in the future. It's support@theotrade.com. This is our phone number. But to get a hold of me, I'm very frank with you. Okay, I don't typically pick up the phone, but I answer all the emails. Support@theotrade.com. You can put Don in the header. If you want to get a hold of like Tony Rago, put Tony in the header. That's fine. We will be able to answer those questions for you. People, by the way, are always shocked that we answer questions like, any day out there. So it's totally fine with us. Like, don't have any intimidation whatsoever of emailing us. Okay, you're going to get a response back. A lot of people don't do that. They kind of feel like, oh, I'm above that. Listen, okay, I kind of grew up in the trading world, but all the years I spent at like Thinkorswim, TD Ameritrade, we always answered clients. It's no different. Who cares? I allocate about 3 hours a day just to answer emails, and I'll continue to do that, right? And if, eventually we have 10,000 clients, I'll bring on a couple of other instructors that are as qualified, if not more qualified, than I am to answer those emails, and that's what we do. Even our support staff here, just to give you an idea, our support staff, gentleman's name is John Pistone. This guy, he'll pick up the phone. He's a trader. Okay, he's a trader, but he doesn't really want to be an instructor. I'm like, fine. You want to answer emails? He's like, yes, I do. He's awesome. Okay, and he trades with us every single day. So pretty much, everybody here at Theo Trade, soup to nuts, has that trading experience behind them. All right. Other questions that are coming up in here. Oh, by the way, again, we do offer that discount at TD Ameritrade, E-Trade, even if you have an opened account. If you have not opened an account, we just ask you to go through our link on our site, okay, our link on our site, and that will get you the discounted rate. With that, I want to wrap up this evening. I've kept everybody a couple of minutes later than I intended to. I want to thank everybody for coming out tonight. Again, if you need to get a hold of me after this evening, just support at TheoTrade.com. Again, go to TheoTrade.com/all. I'll see you in the chat room. I'll be there tomorrow morning, first thing. We kick off at 8:22 Central Time. That's 8 minutes before the cash open. I'll be the first presenter tomorrow morning on Wednesday. I'll be the first presenter pretty much every single day. But tomorrow, Wednesday, we actually have about 7 hours of programming scheduled tomorrow. So stay tuned. We'll be there first thing in the morning. If you can log in, please do. If not, hey, we'll catch you in the chat room eventually. Thanks, everybody, for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.